What's going on YouTube? It's your boy Technicam, and I'm back with another market update video. I'm sorry it's been so long. I've been so busy, but I don't want to waste your time. This is not financial advice. All of the content is for educational and informational purposes only. These opinions are my own, so please do your own research before making any investment decisions. What is going on in the market, guys? Stocks have been stalling since October. The S&P 500 has been struggling to get over the 7,000 level. The Epstein files have been plaguing the Trump administration. Trump has apparently picked a new Fed chair that is considered hawkish, meaning he is widely considered widely expected to pursue higher interest rates, generally speaking. Although, just to note, I don't know if that's necessarily true. He was just critical of the Fed moving too late to raise interest rates after pumping the market with COVID stimulus. There's a lot going on here, though, and the Epstein administration is really plaguing the Trump stock market. Trump has been propping this market up with all of his promises, everything that benefits corporate earnings and the likes. But these Epstein files have really seriously implicated him, unless you've been living under a rock. Trump, Pam Bondi, Kash Patel, these guys have looked absolutely horrible and have been losing the trust from the public. So there's a lot of noise out there, and it's really hard to figure out what to do. Should you buy? Should you sell? Should you hold on for dear life? I think it's important to look at the charts, look at the technical analysis, the technical indicators, because you can remove emotion from your investment decisions. This can help you create objective decision-making processes, right? Just looking at the charts, analyzing the buyers and sellers. Ultimately, it is not about the fundamental story. It is about what buyers and sellers agree the price is. So let's look at the S&P 500. We have been stalling here at this 680, 690 level since October. It's been almost 4 months now, and we've gone absolutely nowhere. From the April lows here, these are weekly candles, by the way. From the April lows here, we've been in this trend, and we about a month ago broke below it, and this this resistance line as well, we are stuck below. This happened again back in 2024, so pretty eerily similar situation here, although I don't expect the sudden imposition of tariffs like we saw here. So I'm expecting, quite honestly, a retest of this previous high, in the confluence of the 50 weekly moving average. I think that is a pretty reasonable place to find support. But if we're being honest, guys, this is bearish. This is not positive, however you want to cut it. We've been seeing an RSI bearish divergence since the summer, since July. And actually even earlier here in March 2024, when you're looking at the weekly chart. Dang, not great, guys. Basically what that means is, as the stock market's been ripping up, the momentum of buying has been going down, or the buying pressure has been going down, which is not ideal for the stock market to continue higher. Obviously, we are constantly climbing the wall of worry, guys. That's what it's called, the stock market. There's always something to worry about and a reason to sell, etc. But a correction is normal, right? And I think that this is a great place to anticipate the stock market to head into, because we need some positive developments, or we're going to start breaking down more here, especially with tech breaking down. Let's go over to the NASDAQ 100, QQQ. That is the top 100 tech companies. As you can see, a similar pattern here, this wedge breaking down below it. As we saw before here with tariffs, we broke out of the wedge, cut right through this moving average. I'm not quite expecting the same move. As you can see, these big red candles, not quite the same here today. But I think this previous high could serve as a good support level with that 50 weekly moving average here. And the RSI, we need to find some support down here, or potentially, if you zoom out, could come down a little lower to like that 45 range. So we'll see, but momentum, guys, that is not good. That is a widening, deep sell-off, momentum sell-off right here. It looks like it's getting worse. Although, when you look under the hood even further, tech companies, right, there's different kinds. There's, actual tech, and then there's software, right? It's a split of the two. We're currently seeing software get absolutely murdered, taken behind the shed, and beaten to death here as the promise of AI agents. If you've not heard of Claude it's basically an AI agent you can install on your Mac Mini, and it can just do all this stuff for you. You don't have to use these software as a service companies. You can just create them yourself. That's the theory, at least, right? That's why you're seeing the selling pressure in software companies like Adobe, Duolingo. I saw that someone created Duolingo in 10 minutes with a couple prompts on ChatGPT, right? Obviously hyperbole, but that is essentially what we're seeing here. These software companies like Expedia, right? You're not going to need to book your own flights anymore. Your AI agent will do it for you. It's crazy to think, but the world we're living in is rapidly evolving, and we are seeing a fundamental repricing of software. The good news is we are at quite a support level here, guys. That is the 200 weekly moving average, the godfather of all support. And it actually lines up perfectly with this long-term Fibonacci support level. I love the Fibonacci numbers, guys. If you know me, it's not random. It's Fibonacci, right? I don't make the rules. These Fibonacci's numbers come up again and again in nature, and it's no different in the stock market, guys. These are high probability entrance zones. Look here, between the 200 weekly moving average and the 0.618 Fibonacci support level, right? That is just 0.618 times the move here. That is a good support level. And also this RSI is, way oversold territory. But when you look at the momentum, it's not improving. So it's a tale of two stories, because the SMH, which is the semiconductor index, think chips, think NVIDIA, think AMD, think Broadcom, TSM, etc. Guys, it is just climbing higher and higher and higher, right? Where is the money going for AI? In some cases it is going towards the software companies, but it is flowing in at an increasing level towards these chips, towards these companies that create the data centers and the equipment for the data centers, right? Like the HVAC, the cooling racks, the actual chips. These are the companies that are, getting the actual revenue from this AI boom. So I think we can continue to see these go higher. I did see today that NVIDIA partnered with Meta on a multi-billion chip deal. AMD is down after hours, but we're going to continue to see more capex from these big tech companies, and it's going to go towards things like chips. It's going to go towards things like cooling racks, and it's going to go towards energy sources for those data centers, whether it's natural gas or hydrocarbon fuel cells or small modular reactors down the line. Right? These are the things that are ultimately going to see the flow of capital and benefit the most from the AI boom. Then, if we go over to Bitcoin also taken behind the shed, beaten to death, guys. Max fear on Bitcoin right now. If you know Michael Saylor, the founder of MicroStrategy, he is shaking in his boots. Just kidding. He keeps buying Bitcoin, somehow at the worst possible prices. I think he just bought some the other day at 76K. How is that even possible? We're down to 67K. All jokes aside, as we saw a previous run up towards the 67 level, which is what we're kind of holding around. We're just closing under it, though, on the weekly candle. Not good. We need to see some buying volume, or we are going to find ourselves at the confluence of the golden Fibonacci support in the 200 weekly moving average. Guys, that is a high probability entrance zone. See how when it entered this zone before, immediately buying went up like almost 10,000 off that level. But I think you can count on potentially one more move down here. Momentum is still selling off. RSI still trending downwards, and we still have the 200 weekly average below us. I would expect it to go probably at least briefly below that. You can pair these indicators as well with Elliott wave theory. Oftentimes when you have a correction in stocks, it follows a ABC correction pattern. So basically you have these impulsive wave moves up, but then you have an ABC correction, which means an A move down, A wave down, a B wave retracement, and then a C wave move down. Oftentimes these are very symmetrical in nature. The A wave and the C wave are equal. So if you took the A measurement of the A wave, which is what I did, and you applied it to the top of this B wave, you get down towards 52K. So I'm anticipating a buy zone of 52 to 57K on Bitcoin, guys. Once we get the Clarity Act passed, there is no slowing down on Bitcoin and Ethereum and other cryptocurrencies, to be specific. So I would seriously consider not selling your Bitcoin if you're a bag holder. I know it's been brutal. We're in this Bitcoin winter right now. But two, seriously considering an entry or an add if you don't own Bitcoin here at this 52 to 57K level. I think we can really expect to see that. I will say, unfortunately, we saw some tweets that don't bode well for Bitcoin. Where is it? Ooh, what the heck? Bear with me, guys. I don't know where it is. All right, I'll find it. Scottie Pippen tweeted today, guys. Bitcoin. Scottie Pippen, the best technical analyst in the world. Just kidding. He has no idea what he's talking about. Actually, this is a bearish pattern. I don't know if he understands what he's posting, but this is essentially a bear flag. I mean, maybe not technically a bear flag, but a bearish pennant here, where I would expect it to maybe test that 70,000 level again and then fall down towards that range I highlighted here, guys. Right? All right. Towards that range I highlighted here, 57K. But honestly, I think my pick for crypto would have to be Ethereum. Right? This is ultimately the blockchain where the tokenization of assets will take place. You will no longer own the actual asset. It will be tokenized on the blockchain. I don't know exactly how good or bad that is, the pros and cons of that, but I can tell you it's probably going to happen, especially if that Clarity Act passes. Polymarket has a 70% chance it does pass. So definitely consider Ethereum and Bitcoin here, guys. Similar to Bitcoin, we have this major trend line here of the recent Ethereum lows over the last couple of years and lining up with an ABC style correction. Obviously, we're well below the 200 weekly moving average. Ethereum is more speculative than Bitcoin, so it will be, going up more or going down more than Bitcoin is. And that is what we're seeing here. The Bitcoin sell-off was brutal. Ethereum is worse, believe it or not. But ABC correction, guys. This is what I did here. Again, you have an A, you have a B. From the top of B down to C, you get, with this trend line, an entrance point of around 1150 to 1500. So yes, guys, there is essentially another potential 50% haircut on the table. But that's why we're doing these charts, right? We're taking the emotion out of it, and we're just looking at high probability entry points. So unfortunately, if you're a bag holder, you're down pretty bad. But this is not the point where you sell. This is the point where you start dollar cost averaging down, right? Getting your cost down so that when Ethereum goes back up, you can capitalize on that. And that's all I really got today, guys. I just want to do a quick market update on some of the major indices, Bitcoin, Ethereum, etc. Show you guys what's happening under the hood. Unfortunately, I am short-term bearish. I guess we'll see what happens on Friday with the tariffs. Obviously, if they're deemed illegal, I think that would be good, but we'll have to see what the framework is for refunds of those tariffs. Who is ultimately going to see the benefit of that? Is it the consumers? Is it the importers? Who's going to see that, right? And if you want to see my favorite stock picks right now, I have, there's a mixture of value and growth stock picks that I'm watching very carefully. I'm going to make some YouTube shorts covering those. So go over to the channel, check out my shorts page, and it's just more digestible, shorter content for you to see and, actually look at the stocks that I'm looking at right now.